Right, let's get into it. Time to look at some charts again. Thanks for joining me. Really great to have you on board with the channel. Please hit the subscribe and the like button if you enjoy any of my content. Usual stuff at the beginning. None of this is financial advice. I'm not an investment or a financial professional. I am someone who is merely obsessed with technical analysis and charts and has spent many years trying to teach himself a bit about the market. So I hope you find some of what I share entertaining, maybe even mildly useful, but definitely don't make any investment decisions off the back of anything you hear from me. Let's get to it. What I've tried to do over the last couple of months is, I suppose, use these videos as an opportunity to share the bigger picture, what I see as the kind of big macro factors that are impacting on where price is likely heading in markets such as equities and cryptocurrencies, but also share some kind of short-term thoughts on price action and how I might be thinking about trading in and out of positions, both going long and short. And a big part of the former, so a big part of my macro thesis, where I see markets heading, where I think we are in the overall market cycle, is the bond market. So if you go back to my pinned thread on X, which is at part-time charts, you will see that I've set out a thesis for the market that looks something like, over the next couple of years, dollar up massively, equities and crypto in a toilet, and rates up significantly. And I'm painting a picture of what looks like a stagflationary crisis. And I think we are seeing signs now that that is rearing its head in some ugly ways. No more so than what I think is the incoming death of the bond market. And what do I mean by that? Well, this is the TLT. So it's an ETF that tracks treasury bonds. And I'm using this as a proxy for the health of the bond market. And as you can see, guys, it's not looking good. For decades, we painted this big sort of rising, broadening wedge with the top that was hit during the COVID crisis. And the price of bonds never really recovered. And what has happened as bond prices have fallen since 2020 is that yields have gone up dramatically. Now that's significant because for the best part of 40 years, since the mid-80s, we have had a situation in which rates have largely been trending down. And of course, we've had one or two bounces along the way, but by and large, rates have been falling, culminating in this absolute capitulation of rates during the COVID crisis in early 2020. But what has happened since then is that rates have bounced back with a vengeance. And why is this significant? Well, because fundamentally our entire economy is built on debt. So Western nations are leveraged up to their eyeballs. Asset prices, including the stock market, have largely been a function of debt and growth in the money supply. And if we are starting to see the early signs of a regime change, that is likely to have major consequences for investors and for the market. And we saw that because in 2022, as yields continued to rise off the back of these lows and started to break this major downtrend, we saw massive instability, massive volatility in the equity markets. And what we got was something like a circa 30% crash in the price of the Nasdaq. And obviously, broadly speaking, most equities followed suit. We saw big declines, and at the same time, cryptocurrency suffered a major correction. I think the price of Bitcoin from top to bottom was down about 75-80%. So look, this stuff matters. And what I'm seeing in the bond market is that we are at the gates of hell. And I've talked about this a few times, particularly on X. I think we're back at these really significant lows on the TLT. And I'm not seeing any real signs that there is strength coming into the bond market anytime soon. So what I'm anticipating is that at some point in the coming months, these lows here, which you can see have held all the way back to the early noughties, these lows are likely to break. And when they do, I think that spells big trouble for the bond market and also for equity investors. The reason being that if the price of these bonds falls significantly, what is going to happen to yields? It means yields are going to go through the roof. And look, I just don't think if you break a 40-year downtrend, lots of people have been saying rates are going back to zero, they're going lower. It is possible on a very short-term basis that if we see some sort of financial crisis, maybe rates get lowered in response. But policymakers have been trying to lower rates for months now. You know, you keep seeing the headlines, the Bank of England, the Fed, the base rates being lowered. But what keeps happening? These are, this is the yield on 30-year government bonds, and the yields just keep bouncing back. And I think we are likely to see further upside on yields. That is going to put massive pressure on the average investor and also on Wall Street institutions that are highly leveraged and governments who ultimately have been spending beyond their means for the best part of 40 years. And so what I'm seeing is that the debt bubble that we've lived in over the last 40 years, as rates have continued to come down, crashing to almost zero 5 years ago, that era is coming to an end, or has ended in fact, and that ultimately the weight of paying back those debts with higher interest rates attached to them is going to be too big for many nations and institutions and indeed individuals to bear. And as that starts to unfold, I believe that we will see a financial crisis that will be akin to, if not bigger, what we saw in 2008. So that is why, from my perspective, the bond market is so important, because what this is signaling is higher rates. It puts a cap on how much governments, individuals, institutions can borrow, because the cost of borrowing gets driven higher. And crucially, the weight of paying back all the debt that is in the system at the moment becomes harder to bear, because those rates are putting more pressure financially on the government and on institutions and individuals. So that is key to my thesis. And as you all know, I have for some time been bearish. This is a chart of the Nasdaq over the last sort of 5 years, and I've been saying for some time that a break of this uptrend was coming. We got that in February, just after I called it up here. We saw a major correction. Probably the steepness of this correction meant that a really significant bounce upwards was likely, and we've seen that materialize. And I have been expecting price to peak at some point in this region before rolling over. Now, we've squeezed higher, and lots of people, I think there's a huge amount of complacency in the market at the moment. Lots of people are saying we're heading for a blow off top. You can't stop this train. We're heading much higher. Bears are screwed. And look, they may be right. Maybe price continues on this upward trajectory. We reclaim the lower boundary of this rising channel. And if that happens, then I will have to reassess my position. But for now, this looks to me like the first lower high of a much bigger trend shift. And it's important to recognize that the kind of trend shift I'm talking about, we've had 40 years of growing levels of debt. We've had 40 years of rates being on the decline, asset prices benefiting from ample cheap money flowing into the system, from governments and institutions borrowing huge amounts of money and using that cash to prop up asset prices. That has gone on for 40 years. So in my view, the shift that happens when the music stops and when people are found with their pants down in a really desperate debt crisis situation, I think that turning point is just going to take time. So I know people are excited about this bounce, and I know right now people like me who are calling for much, much lower on the Nasdaq and on the S&P and indeed on cryptocurrencies look a bit stupid. But it's my contention that this is nothing more than a bear market bounce, that it lures a lot of people back into the market. It leaves people feeling really, really complacent again, leaves bears feeling a bit stupid. But ultimately, when it does turn and it rolls over, I think we're going to see a rapid decline that is really going to scare people. And why do I have confidence in that being the case? Well, look, of course it is possible that price just breaks higher and we do see some sort of blow off top scenario. There's no point in ruling things out in this market. You have to trade with price action. But I just wanted to go back. The last two major corrections that we've had in the stock market, 2000 and 2008, you look at how messy these tops were, right? So at first we saw this big decline in the S&P where we were down 12% in a very short space of time, a matter of about 3 or 4 weeks. And then we got this massive bounce up, which lasted so long that it actually took out the previous high. And equally here, look at how messy this top is. First big dip, and then we came all the way back up near the previous high before price really started to roll over. So I suppose for me, the fact that price has bounced after seeing such a rapid decline here is not surprising. It's what you would expect to see. What happens next is crucial. Were we to reclaim this trend line, take out the previous high, there's absolutely no point being bearish up here. But even in that scenario, people back here, I'm not old enough to remember the specifics. I was very young when this happened, just finishing off university. And I wasn't massively interested in markets at the time, but I suspect people that were very, very bullish here. And people were feeling as though, wow, the bulls are back in town. You were stupid to be bearish. Price is going to roll over. Let's look at the crypto market for a bit. So my contention is bond market is going to hell in a handbasket. Yields are going to press on higher. That's going to put massive pressure on equities and other assets as people grapple with the rising cost of borrowing, an inflationary environment, which I think we can see that commodities are pointing to. We can come back to that later perhaps if we get time. And that the equity market is going to struggle under the weight of all of that. And I suspect that we are nearing a top. And it's possible that this pushes a bit higher before rolling over. But I still contend that we're going to head much lower. And it's important, just before we go into the crypto market, just important to zoom out a little bit, right? This massive upward channel dates all the way back to 1929, which was the start of the Great Depression, which saw equities get absolutely hammered, down about 80%, I think, over a couple of years, even bigger, 80, 85, 86%. This channel has formed, and we've touched the top of this channel. This is now the third time. From my perspective, expecting a blow off top when we're heading into this kind of resistance is silly. Now, if we break above and start to hold on a monthly, maybe I'll entertain the idea that we're going to go higher before coming down. But right now, I know it's tempting to get drawn into the lower time frames and to look at the daily, the weekly charts and draw conclusions. But zoom out and look bigger picture. This is not the place to be bullish, guys, at least not in my view. And so what does that mean for cryptocurrency? Well, this is the Grayscale Bitcoin Trust, probably the first real ETF that existed in the space. And I've been saying for months, way back into late 2024, that I think we are putting a major top in here and that this rising wedge pattern is going to be completed during the financial crisis that will be triggered by the crisis in bonds, rising yields, inflation, and massive pressure on governments, financial institutions. And so, yes, we've bounced recently, and I was, to some extent caught off guard by just how long this bounce has taken to play out. Those of you who follow me closely know that I called for a big breakout on Bitcoin about 3 or 4 weeks ago, and I traded a big chunk of this move. But if you were to tell me back here that we'd still be floating around at this price, 5 or 6 months later, I probably wouldn't have believed you. I did think that by now we would start to see serious deterioration. But on the bigger picture, in the grand scheme of things, has anything really changed? We haven't broken this upper boundary. Were we to do that, were we to come up here and start to hold above, then possibly I could entertain the idea that the market might be heading higher. But for now, one of the cardinal sins of any investor or trader is getting bullish into resistance. And I just can't see, given the broader market conditions, given the fact that the price action on GBTC is so clean, I just can't see a reason to be bullish on Bitcoin at the moment. And this is an underrated chart in my view. Like I say, there are some really clear levels laid out here, some really clear trend lines. Very few people are looking at this chart, but I think it tells me a lot about what is potentially around the corner. And another one that I've been looking at recently is the price of Bitcoin versus the dollar index, the DXY. So ever so slightly different chart from what you see against USD. But again, I've been saying for months that I see this as some sort of megaphone pattern, a huge, gigantic macro accumulation before we get something much higher. And, to me, that literally does look something like, maybe look at this on the monthly, something like this. I really do believe that this is just one huge multi-year accumulation that destroys both bulls and bears before price begins to head much, much higher after this crisis is out of the way. And if you look at what price action looks like on the weekly or the 2 weekly, you're starting to see, again, when I see on the higher time frames these bearish divergences building up, this is the second time that price has made new highs and the RSI has failed to break into a new high. Additionally, this upper trend line has capped price all the way back to 2021, and I suspect that this is not the place to be bullish. So for all the noise on X at the moment, and I'm pretty sure I am the only bear left standing after what's happened over the last few weeks, for everybody being super, super bullish, I think there are real reasons to be cautious here. And I certainly would not be entertaining longs until we got a really convincing higher time frame break above this level. So for me, rule number one, do not get bullish into resistance. That's where we are right now. And I know you can cut the chart a number of different ways, but I'm utterly convinced that this pattern that I see playing out on multiple assets, including some of the big tech stocks like Netflix and Meta, this pattern is really telling. And I think this whole move up from these lows will be unwound, and eventually we will find ourselves in a situation where Bitcoin is trading back in the $3,000 to $4,000 region in 2027. So nothing has changed for me, bigger picture. We've continued to press higher the last couple of weeks. Absolutely fine. I think, could we even press a little bit higher? Could we come in and tap this region again? Absolutely. I'm not worried about what happens on the daily time frame. For me, this is the time to step back, pull away from the daily time frame, and think about the bigger picture. Let's take a quick look at ETH. Look, I didn't take the trade, but because the price action looked so strong at the time, but I was hoping that ETH would eventually move back into this zone, potentially with a short-term deviation above, get back under, and that would be a trigger for me to short. And I was looking for some of these levels that I still believe will play out eventually. And I know lots of people think I'm crazy for thinking that ETH can go back to $80, but I just think if the stock market collapses in the way that I anticipate it, and there are strong signs that that is the case, that we're at the start of a major correction or bear market, then I just see absolutely no way in hell that Ethereum is going to survive. And look, despite the fact that we've powered back through this key SR level, I still believe that the breakdown of this uptrend that dates all the way back to June 22 is significant. And it's interesting, when I was looking at price action from the start of the 2022 correction the other day, and this looks quite similar to me. So you had this downward trend that kept price at bay. Eventually you got a big pop above, and it looked like a really positive breakout. People were really excited. Ethereum's going back to new highs. And then all of a sudden what happened was that over the weeks and months ahead, price got completely and utterly destroyed. And just from this point here down to the low was a 75% move to the downside. And I have a feeling that we're seeing something similar here. This big downtrend has been broken. A key level has been reclaimed. Everybody's super bullish. And look, I'm not ruling out one final pop to the upside. You know, I could see a sort of $100, $200 move up into the 2008 region at a push. But ultimately, I think this is all noise. And what will eventually happen is we'll see price completely roll over, a bit like we did back in 2022. And then we get a resumption of this downtrend, which picks up masses of steam if equities are struggling at the same time. So I'm not in shorts here. I don't love this from a risk return perspective at the moment, just because I think the potential for a push higher is still there. But were we to get back under this 2150 region, were we to come back in, retest the underside of this, that would be, for me, a sign that gives me more confidence that downside is ahead. At the moment, look, bulls are in charge. This level's been reclaimed. The downtrend has been broken. But if I'm right about the bigger picture, about the future of bonds, about where the equity market is at the moment, then I think we're going to see this roll over in a big way. I just wanted to wrap up. This is Solana versus Ethereum. And a few people have been posting this chart recently. I think people see it as evidence that Solana's dominance is coming to an end and that this is Ethereum's day. But there's something that I wanted to draw your attention to, and that is the fact that when we saw a macro top on Solana versus Ethereum in 2021, that actually marked almost to a T the actual peak of the entire cryptocurrency market and the top on Bitcoin. And so we've seen this gigantic topping pattern that dates all the way back to well over a year ago, January 2024. We started to paint this big rising wedge. If that breaks down, I know the Ethereum bulls are celebrating the fact that this looks like it's breaking down, but to me, it's not just bearish for Solana, it's also bearish for Ethereum. So again, the last time that we saw a major peak on the Solana ETH pair was exactly where we saw Ethereum top out. Solana has been the market leader, undoubtedly. I mean, I know there are low cap altcoins that have maybe outperformed, but in terms of the majors, Solana has massively outperformed Ethereum since the bottom of the 2022 downtrend. And if it's showing serious weakness, to me, that is not a sign that all is well in the market. I think a really healthy market, I would like to see the strength of this trend in Solana versus Ethereum continue. It's absolutely possible that Solana sort of floats around flat on the USD pair and Ethereum booms, and then it's Ethereum booming that drives this price lower. But I suspect that the weakness in Solana versus Ethereum is actually indicative of a much bigger problem in the crypto market. So that, again, leads me to believe that what we've seen on the Solana pair recently is nothing more than a lower high. And you'll recall back here, I said if we reclaim this level on the lower time frame, if we reclaimed here, these lows would lead to upside that would take us into this region and this region. Both targets have been hit perfectly. And now we're starting to see, after a bearish div on the RSI here, we're starting to see weakness. We're back under these highs. So I expect Solana to top out in this region. We could get one more push higher. We take out these highs. There are traps in the crypto market that catch you off guard. But I expect us to revisit these lows, and this time they're not going to hold. They're going to break down in a big way. And so bigger picture on Solana, I am still expecting something like, just trying to find the right chart, something like this move that I forecast way back in December, January, which would take us back into this $4 region. I know this looks impressive, guys. We've swept the lows, price has rallied, but in the grand scheme of things, there's absolutely no reason to believe that this can't just roll over, take out this major uptrend, and then, oh boy, Solana's in trouble, because there is no support until the $24, $25 region. And I think eventually we'll break that and head much lower. So nothing has changed for me on the bigger picture. I really do believe that the bond market is in trouble. I think we see that with the strengths in yields. And yields are going to put pressure on the markets. Remember, it was 2022 when yields were breaking higher that you saw equities and crypto roll over, while we had that year-long correction as we got these big moves in the bond market and on yields. And if that happens again, I expect the result to be similar. We're going to roll over. In hindsight, this will look like nothing but a test of this channel, this upper boundary of this channel. And I think the S&P and the NASDAQ are going to correct massively. I mean, my bigger picture forecast for the NASDAQ is that we end up down something like 75%. And you can see that in this chart here, that I think eventually when price starts to show weakness again, we retest this trend line. I don't think it holds, and I think it takes us back into the $6,000 region in 2027. So bonds down, yields up, equities down, crypto down. A bigger, worse version of what happened in 2022. And the final chart that I will just leave you on, if I can pull it up quickly, is what I'm seeing on the dollar. So you remember in 2022, it was bonds down, equities and crypto down, dollar up. And we saw this massive parabolic rise in the dollar. Since then, we've seen this sort of right-angled triangle formation playing out. When these lows were taken out last month, back in April, lots of people became bearish on the dollar. And I myself flirted with the idea that maybe I was wrong. But since then, we've seen a big reclaim of this level. And I expect that reclaim to lead to really significant upside, at least taking us back to the 2022 highs. But I think we'll go as high as about 120 eventually. And for added confluence, here's what that would look like in relation to this massive rising channel that has been in existence since about 2008. So it could be a big blow off top, perhaps some sort of accumulation cylinder, throw over, back underneath this key level eventually. And then here's where I expect equities to bottom. And what will happen once that takes place, in my view, is that you'll see decades of dollar weakness versus our currencies, and that will drive markets across the world much higher. And the sort of 40-year dominance that we've seen of US assets versus the rest of the world will come to an end. But we're not quite there yet, folks. I really do expect the dollar to be dominant. Look, quite simply, if people are flooding for the exit doors or the exit gates, if people are heading out of equities, heading out of bonds, what the hell are they buying? They're not selling equities and bonds for gold immediately. They have to sell for the US dollar. It's the most liquid currency in the world. And I think that crisis that I'm reflecting on in the bond market and the equity market is going to drive the dollar much, much higher. And the fact that we have made that massive reclaim of these lows gives me a lot more confidence that this was one massive bear trap on the dollar, and that we're going to see the return of the king, the US dollar, putting a lot of pressure on assets across the world as people flood into it for safety. So that's my view. I hope some of that is useful. I bid you a good weekend. I hope you're all well. Thank you for your support as usual. I really do appreciate everybody that stops by and leaves comments on the channel. Please do share, like and subscribe. Anything you can do to help me grow the channel, to help me grow my reach is really helpful. Hopefully it means I'll be more incentivized to bring you just as good content in the future and potentially get some great guests lined up for you guys to speak to too. It's been a pleasure. Take care.